on this moving average. So I actually tried to play that, but it was a bit choppy before the show. And you can see that it actually did a false breakdown here, pushed a bit higher. So that's interesting. I think that's going to be one to watch. A false breakdown here, pushed a bit higher. All right, looks like we are live. So just double checking things. All right. So welcome to Engineering the Market. Apologies for the delay. We were having a bit of audio issue on the back end. So as always, my name is Jared. It is November 9th, 2021. And let's take a look at some nuance in the market. Markets continue to grind higher. We are essentially looking for momentum stall out at this point. We're trying to see if the market is setting up any sort of like technical traps near the top end. As we know, a market that has yet to give a pullback is often a bit unstable. And oftentimes the top end movement can be met with harsher selling once that buying climax is put in. Some nuance here in regards to that sentiment. We have this sort of basic study being shown here. The idea is very simple. Oftentimes when the market continues to grind higher, you're looking for higher highs and higher lows each and every day. But more specifically, you're also looking for the acceptance or the rejection of previous day closes. The idea that the market can sort of pivot around these levels. And if the market does not show that sort of weakness and continual acceptance of higher prices, you often will find that it is very challenging to go against that dominant trend. We have sort of our first area of interest as we approached all-time highs, very strong bullish push into this level. And as the market was trying to pivot around this point, maybe some bearish type candles in this segment, we obviously continue to move higher as we turned the trend around. The yellow candles indicating the potential for a pivot, and then the black candles just showing that we are rejecting that pivot and not confirming it to the downside. Unlike this segment here, where we started to stall near the all-time high, started to put in that price rejection, and then of course the larger selling confirmation with the red candles being indicated. So what's interesting about this is we are seeing a bit of a stall inside of the price of the S&Ps. We have two sort of isolated pivot type candles near the highs. The market has yet to break out from this area. But as you saw in the study, we have not quite yet rejected previous day close nor broken from this 2-day zone of interest. Yesterday being an inside day from the Friday session. And more notably, one thing to keep an eye on is yesterday was that inside day. So we have not printed a new high after a period of printing new all-time highs over the past 6 sessions. And of course, that ending on Friday. So market may be taking a bit of a break. We're seeing a bit of a pause in the overall momentum. And if we look at the NASDAQ and do that same sort of assessment, we can see that there is a bit of a potential for a possible pivot near the highs. Now, as with any pivot, the idea is fairly straightforward. Where did you come from? In this case, this has been a very significant bullish uptrend. And during that pivot, are we looking at larger selling pressure? Are we seeing basically stronger selling come in? Or are we simply seeing a lower volume pullback? Something that may be eventually viable once we get to an area of interest, something like channel support, which the NASDAQ is trying to confirm a breakout, or something as simple as a retest of the previous all-time highs. That structure of a trending market printing higher highs and higher lows and using things like moving averages or previous swing highs as support. So market overall is not really bearish in this area, but I think we're also starting to see some potential lower risk to reward near the all-time highs, especially with the lack of any sort of pullback to really define that risk level. Finally, as we look at the IWM, you'll know that a lot of our BBT traders took advantage of this range breakout in the IWM. We're seeing a lot of strong sort of bullish conviction outside of the range. But as with every breakout, there are moments in time where you may wish to take profit. I've gone ahead and marked the IWM specifically with a Fibonacci high to low retracement tool, and that also will show extensions near the top side of this drawing tool. Now, if I zoom in here, you'll see that the 161 extension is approximately 244.6, and that's measuring from, in my opinion, the buying climax high of the range down to the initial low, which set up the range in the first place. So if you are looking to have targets, this is often a good tool to consider, as these Fibonacci extensions tend to be fairly well respected. And oftentimes what you'll simply see is the initial stall or pullback set up near these extensions. Now, contextually, this setup was on larger time frames. So from the weekly perspective, nothing really looks out of place. Very strong sort of bullish breakout, our first potential stall candle. And ultimately, if this market is to go higher, we'll be looking at something like a 3 to 4 bar type setup. An expansion of range, that's the first candle here, 2 to 3 candles worth of stall, I guess 1 to 2 candles of stall, depending on how long it takes. And then the eventual breakout of that high. That'll, of course, lead to higher price targets if this market continues to push. So as with everything, different markets, different areas of interest, but we're also seeing lots of stall across multiple areas of the market. Now, when we look a little bit deeper, we can start to see what sectors are performing throughout this bullish momentum and ultimately try to assess whether any of them are at risk of a deeper pullback. So I'll go ahead and load up something like an RSI just to show some of the overextension that we do have in some of these markets. Something like XLK, one of the stronger leaders in the past couple of weeks, we are getting a bit of an oversold reading in the RSI. So as with everything, this is simply a condition of the market. It is not a sell signal by itself, but you can start to see that the risk to reward gets worse as these signals start to form. And oftentimes in previous history, whenever you get these initial overbought readings, I might have said oversold, I meant overbought, you'll often see things like RSI divergences near the highs, where the market still prints higher highs, but you get lower high type readings in these indicators. These often will set up for the potential of the first type of correction or pullback, and ultimately the market can move forward from these points, but the risk to reward becomes a bit more challenging when you get these types of readings. That's also true of one of our stronger sectors, XLY, the discretionary sector. We know that Tesla has been an area of interest or a stock in focus for a long period of time. But as with every move higher, we're often going to be looking for the market to pivot. And that's just setting up for the first round of pullback in a possible breakout type scenario. This market did have a healthy breakout from an area of interest, basically a range that had formed over a period of time. We are seeing the overextension, the overbought readings in something like the RSI, And then just combining it with that pivot-based structure or that pivot study, you can see that this market may be about to put in a bit of a top. And from that point, we're just simply looking for where does the pullback stop? Is it going to give back everything from the breakout? That would need to be facilitated by larger selling pressure, or will the pullback be on lower volume? Looking for something like a moving average to set up for the next buying zone. And obviously these overextensions, the moving averages take time to catch up to price. One thing I like to do, if I shift back over to the tech sector, is simply look at lower time frames and start to assess whether there's any issue with the shorter time frame trends. Something like XLK, you can see, has been riding a very simple 50 or 20 moving average throughout this entire period of breakout. And we also have, of course, some of our key stocks, the likes of Microsoft doing something very similar, riding this 50 and 20 sort of band of support. We have stocks like NVIDIA, which if I shift back to the daily, have actually been more in breakout mode and seeing plenty of overextension. Once again, adding that RSI to simply show that we're in an area of interest. The market is overreaching. And during these overreaches, they can continue to move higher for a long period of time before a stronger selling pressure pushes them back to respectable levels. So watching out for these stocks because it's starting to basically perpetuate into different names. The likes of NVIDIA was bid higher last week and extended very far from our expected move, which we looked at briefly yesterday. But now we have news filtering into AMD. They're looking to be one of the key companies in regards to the new metaverse announcement with regards to Facebook. So as with everything, this has been a very strong uptrend. The uptrend is getting more and more elevated. We're getting farther away from trendline support. And ultimately, this is not something you want to fight. But as you see, this can get a bit extreme. And these extremes can be met with larger pullbacks. The pullback simply being pulls back to normal trending support. So understanding that risk profile and ultimately not necessarily shorting these stocks as they continue to climb, but being aware of how deep the pullbacks can be. Things have gotten a bit elevated, especially in the semiconductor space. As we look at SMH, we can see that overreach as well. Once again, keeping RSI in focus and just showing the overbought conditions. So as a whole, tech, consumer discretionary, and then some of our previous leader type sectors, energy, continuing to hold daily trend, simply sort of consolidative in this upper range. Financials, not necessarily outperforming, but once again, holding daily support and even coming into a possible trend line. As we move into our previous lows, we can see that this is simply holding in this upper range for now. And new sectors that are starting to outperform, the likes of materials having a very strong bullish day yesterday, making new all-time highs. You can see that on something like a monthly chart. Along with industrials getting a lot of boost from the announcement of the passing of the infrastructure bill. So key names in sectors like this are going to be stocks that are more or less conglomerates in the space, along with more specific tool rental and industrial-related companies like Caterpillar, which had a very strong bullish day on yesterday's session. So kind of keeping all of this in focus and understanding that while some sectors are a bit overextended, the bullish posture of the market continues to be more healthy in regards to market breadth. Once again, shifting to the RSP, that equal weight ETF, you can see that we've actually been climbing in regards to different sectors taking the lead at different points in time, which has kept the momentum very strong in the overall SPY. That's also true for the NASDAQ, albeit there have been moments of overreach. The semiconductors, the likes of Microsoft continuing to break out to new all-time highs. We have not really seen any issue with this breakout so far, but we're simply looking to see how far will it go before it places a top. And that continues to be a stock in focus amidst other stocks which are a bit more consolidative, likes of Apple having a lot of trouble moving away from a gravity point that I've marked, approximately the 150 level. Last but not least, as we do have a shorter session today, just putting a few things in focus. Yesterday's session sort of solidified where the market is placing some interest moving forward. We have things like EV charging stations starting to get some bullish activity, likes of Blink, ChargePoint, and newer names like EVGO. If we look into the morning session, this is going to be one of our sort of in focus names on the gappers list with lots of bullish activity in the pre-market. Additionally, there's been a new development in the crypto space. We've had a new all-time high in the likes of Bitcoin as of yesterday's session. Now, the equities market was giving us a bit of a clue that this may be occurring very soon. If you were attending on yesterday's session, you'll know that a lot of Bitcoin miner stocks were not only very bullish in the pre-market, but had lots of continuation throughout the session. Now, this breakout in Bitcoin obviously may be met with some profit taking, some sort of initial consolidative type action. But as with anything, just kind of keeping focus on the shorter term trends. Something like the 1 hour, and here I have the 20 moving average in green, has been acting as an area of support. So if this market is going to start pushing to higher prices, doing that range exploration activity, you'll want to see the shorter time frames continue to hold. And if not, you can start to look for the potential of a bit of a distribution pattern, something like a head and shoulders, or the eventual setup of something where we break trend, essentially losing the trend line on the low to high setup so far. So keeping all this in focus, the market obviously continues to push higher. We have a lot of particular stocks in focus. No matter where you look, there's volatility. Key thing here is to sort of remain in the zone when trading. I often find that the more to look at, the harder it can be if you're trying to swap between different things in play. Ultimately, you should have sort of those 1 to 2 key stocks, focusing on them, especially in the open, getting sort of your portfolio boosted or your P&L solidified for the day if you do have profit targets, and then start exploring throughout the market to see what else is in play, trying to take advantage of those moments in time where you're looking for a scalp or a setup. So as always, continue to trade safe. Lots to sort of observe and assess throughout today's session. Market's giving a lot of things to focus on. And depending on where you are in the market, obviously a lot of bullish activity. So congrats to those who have been crypto bulls, who have been sort of the EV bulls in recent history. And then with the IWM trade, congrats to those who took advantage of that range breakout. Lots of key setups here that are working out quite well across the board. So as always, stay tuned for pre-market prep. My name is Jared, and we'll talk more tomorrow.
Okay, hey, good morning, everybody. Hi, this is Peter. We're going to get going with our normal broadcast. We're just experiencing some technical challenges this morning, so apologies to that, to everybody on YouTube. What's going to happen, though, is we're going to need to cut this live feed, because I'm hosting it, such that I can hand over to Carlos. So we're going to end this just in a moment here. Look for a new live feed to be set up on our channel, just where you always find it on the Bear Bull Trading YouTube channel. There'll be another live feed. You can just join into that. So apologies for the technical challenges this morning, but we'll get you going with the usual pre-market prep with Carlos and Norm momentarily. All right, so we're cutting this one. Go over and find the new one. Thanks, everybody.